Local government super manages more than $4.6 billion for its 90,000 and more members in New South Wales. It recently made some mandate changes, and today I have CEO Peter Lambert with me.
Hi Julia.
Thanks for joining me.
My pleasure.
Peter, you've recently terminated a number of hedge fund managers. Can you explain what led you to that decision?
Julia, the hedge fund industry has taken a lot of criticism lately with the returns, and one of the things that we've found is that hedge funds, where you originally went into them because they had a defensive characteristic, that is, they were uncorrelated to a lot of other asset classes. Well, what we've found over the periods of recent market stress is that in fact hedge funds have performed in a very similar manner to equities and other asset classes. Now that leads you to just re-examine whether you've gone into them for the right reason, and we just decided that given a lot of hedge funds are highly leveraged, the risk just isn't worth it.
What sort of advice have you been given on your asset allocation at this time, and is now a good time to implement those changes?
I think all superannuation funds at the moment are getting a lot of advice on their asset allocation. The world has substantially changed to what it was before, and it is important that you re-examine the model, re-examine the assumptions that go into the model, and make the adjustments accordingly, because it's a whole new world we've got out there now.
Macquarie was given a mandate specialising in quality credit. What exactly is quality credit, and how are you going to endeavour to keep them true to label on that?
Quality credit is what I would call investment grade credit, that's A and above. I think what's a feature that we've found in the markets is that they've reacted to the economic environment, and in some situations we believe that perhaps they've acted irrationally. Quality credit offers fantastic value at the moment, and you have to question whether or not, given the soundness of the credit that you're going into, whether in fact you're getting an over premium and in fact it's an opportunity to buy. We're particularly interested in things like mortgage-backed securities at the moment, which are trading at well above bank bill rate.
Barclays Global Investors received a $500 million mandate in passive investment. What spurred you into that direction, and is it a good investment for just these times or any time?
I think at the moment when returns are under such scrutiny, Julia, one of the things that a lot of funds are looking at are their fees. Are you getting sufficient return to justify the fees that you're paying? One of the conclusions we came to is that we could have a passive core in our portfolio, and we've gone to somewhere between 40 and 50%, and look at having some active managers around the core. The advantage of doing that is that we're able to have a small number of active managers that we're very, very much aware of, what they do, how they're performing, and we choose those managers based on what we believe are styles that are suitable for the environment that we're about to go into. And the environment that we believe we're moving into is a very subdued economic environment with a recovery perhaps in a year or two's time. So by looking to just choose a small number of active managers, you are actually able to take active risk where you want it. If you have a large number of active managers, what you ultimately end up with is an index performance with active fees on top.
Local government super is big on being green. Can you explain your green overlay and how it's benefited your members?
Well, our green overlay acts in a number of ways. Firstly, we've got a long-short portfolio where we're able to exit out of specific industries that we believe is not appropriate for our membership. Those are industries like tobacco, uranium, old-growth logging. And what we can do is then go long on firms that we believe are appropriate, that are in sustainable industries. So that's an overlay. Probably one that we're also well known for is our green building policy. We have a policy at the moment where all of our tenants, as a condition of renewing their lease, must commit to green energy. We've now been able to, our first property is now 100% green, and over the next 2 or 3 years we'll progressively have other properties that we own fully green. And that's something we're quite proud of because, interestingly, most of these properties are virtually fully tenanted. So it's clearly not hurting us from a performance aspect.
Is there a cost to your members to be so idealistic in your investments?
Well, local government, I'd like to think, is a constituency that are very comfortable with these sort of issues. We do surveys from time to time, and while we tend to find that perhaps more the younger people are more supportive of it, the fact that we're able to demonstrate that it's not costing money at least means that other people who are perhaps less enthusiastic are still comfortable with what we're doing. But we certainly see being green as an important part of our brand.
Thanks very much, Peter, for joining me today.
My pleasure, Julia. Bye-bye.